War is supposed to destroy economies, right? So why does it sometimes feel like America makes money from it? Yeah, this war could either boost the US economy or quietly drain your bank account without you even noticing. Welcome to Richish, where we break down money, power, and what's actually happening behind the headlines. And real quick, this isn't about taking sides. This isn't about Israel, Iran, or politics. This is about you. How wars like this affect the middle class, your money, your expenses, your future. Because while governments talk about strategy, you're the one paying the price. Part 1. The good side. Alright, let's talk about the part nobody complains about. The profits of this kind of war. Oil money goes crazy. When Europe stops buying oil from Russia, guess who slides into the DMs? America. US oil companies, especially in Texas and the Gulf Coast, start shipping out more oil and gas like it's Black Friday for energy. Prices go up globally, exports go up, and suddenly energy companies are printing money. If you own energy stocks right now, you're probably smiling. If you don't, you're just paying more at the pump. Now let's talk about the real winner in every war. Defense companies. Missiles, drones, AI systems, satellites. This isn't just military stuff anymore. This is a trillion-dollar industry. By 2026, US defense spending is expected to cross $1 trillion. Yeah, and that money doesn't just disappear. It turns into jobs, contracts, and massive paychecks for companies building the tech of war. So while you're budgeting groceries, someone else is getting $1 billion contract to build drones. Now here's where things get interesting. When the world gets scared, money runs to one place. The US dollar. It's like the financial version of hiding in your parents' house during a storm. Investors, countries, big money, they all start parking cash in US assets. And that actually helps America. Borrowing becomes easier, imports become cheaper, and the system looks stable. But here's the thing. Just because something looks strong doesn't mean it actually is. Because all this benefit, yeah, it comes with a hidden bill. And trust me, you're already paying for it. Part 2, the negative side, the hidden cost. Now let's talk about the part nobody celebrates. The bill. Inflation hits. Everything. When war messes with oil prices, it doesn't just affect gas. It hits everything. Airlines pay more, truck companies pay more, factories pay more. And guess what they do next? They pass that cost to you. Higher fuel leads to higher shipping, leads to higher prices. Your groceries, price up. Your Amazon orders, price up. Even your Uber rides, yeah, also price up. Economists say, just fuel price increases alone can push inflation up by almost 1%. That might sound small, but in the real world, that's your monthly budget getting quietly destroyed. Now let's make it personal. You don't track oil markets, but you do check gas prices. When oil hits around $100 a barrel, an average American household could end up paying about $750 extra per year. That's not economic data. That's your vacation fund, your savings, or the money you were finally going to invest. Here's the harsh truth. War doesn't hit everyone equally. The rich? They've got investments, assets, hedges. Big companies? They raise prices and protect profits. But the middle class? They don't have that luxury. They spend most of their income on essentials, gas, food, rent. So when prices go up, they don't adjust. They struggle. And here's where it gets dangerous. It's the silent economic damage. Even if the US economy doesn't technically crash, it can still slow down, hard. Why? Because when millions of middle-class families stop spending, the entire economy feels it. Less shopping, less investing, less growth. So yeah, energy companies might be winning, defense stocks might be booming, but the average American? They're the one paying the hidden tax. Not just for Americans, but for the entire world. And the worst part? Most people don't even realize it's happening. Part 3. Global chess game. Now let's zoom out for a second. This isn't just about gas prices or your grocery bill anymore. This is about power. Wars don't just destroy things, they rearrange the world. When the US steps in to support allies, it's not just helping, it's positioning. Leading NATO, controlling trade deals, setting the rules on tech and exports. And here's the smart part. This isn't just about today's war, it's about the next 20 years. The US can lock countries into long-term deals, buying American weapons, using American software, depending on American energy. It's like getting someone hooked on your ecosystem. Once they're in, they don't leave. So yeah, short term, America looks like the hero. But here's the part nobody likes to talk about. Power isn't free. Every missile, every drone, every tank costs money, real money. And history shows the same pattern every single time. Military spending goes up, government debt goes up, and guess what quietly goes down? Education funding, infrastructure, innovation, the stuff that actually makes a country rich long term. One major study looked at multiple US wars and found something crazy. A small increase in military spending can seriously hurt long-term economic growth. But why? Because money is getting poured into war instead of building the future. So yeah, on the world map, America looks stronger. But on the balance sheet, it might be getting weaker. And that's the real question. Is this a smart investment or the most expensive habit a country can have? Part 4. Reality check. Short-term win, long-term risk. In the short term, things actually look pretty good. Defense factories are busy. Oil exports are booming. The dollar looks strong. GDP goes up. And certain stocks? They get a crazy sugar rush. It's like the economy just took a shot of espresso. Fast, powerful, but temporary. But long term? Debt goes up, inflation sticks around, and interest rates stay higher for longer. So yeah, your loans? Still expensive. Your EM is? Still painful. And if the war drags on, we enter a loop that's really hard to escape. Prices go up, so people demand higher wages. Wages go up, so companies raise prices again. And boom, inflation goes even higher. And what does the Fed do? Raises interest rates, and that slows down everything. Jobs, spending, growth. But economists actually have a term for this kind of situation. A lethal cocktail. High inflation, high debt, and pressure on the currency. And historically, wars have created this exact combo again and again. So yeah, in the beginning, it looks like growth, but it can quietly turn into a slowdown. And by the time most people notice, it's already too late. Part 5. The final verdict. So after all this, here's the truth nobody likes to say out loud. War is expensive. Even for the most powerful country on earth. The US might have the biggest military, the strongest currency, the most influence, but every single move still has a cost. Every bomb dropped, every fighter jet deployed, every barrel of oil bought in a crisis is a financial decision. It's not just spending money, it's choosing where not to spend it. Guns or schools, weapons or infrastructure, short-term profits or long-term growth. But you don't get both. Now let's bring it back to you, the investor. Because yeah, you can make money during times like this. Defense stocks go up, energy companies rally. That opportunity is real. But if that's all you see, you're missing the bigger picture. Because while markets are going up, inflation is quietly eating your money. So smart investors don't just chase profits, they protect themselves too. Think inflation-resistant assets. Think smarter fixed income. Think diversification beyond just war stocks. Basically, don't just ride the wave, make sure you don't drown under it. So the final line of this video is simple. Winning a war doesn't always mean winning economically. If this made you think differently, you already know what to do. Hit that like button, subscribe, and tell me in the comments, do you think the US comes out of this war richer or poorer in the long run?